Today, I'm with John Coleman from JC Mortgages.
Your basic salary is the fundamental most important piece. Well, I've always been aiming for a B at school,
Okay.
right? So,
A lot of people in the Indian community do is sending money back home, so...
the one thing that causes a bit of pain for the Indian community, there's a thing called a credit report called the Experience Credit Report.
Mm-hmm.
So if you haven't been living in Ireland for over 5 years, knowing no matter what happens for the next 3, 5, 10 years, that the rates won't change. Other banks are may only allow you to pay 10% of the mortgage. So say you owe 300,000.
Vaikitentha Parupadi.
Today, I'm with John Coleman from JC Mortgages. He has over 20 years of experience in the mortgage advisory industry and he's truly a veteran in this field. But interestingly, he wanted to be a teacher first, and in many ways he still is. He makes what seems like such an overwhelming process into something that's much easier to navigate. So John, so nice to meet you. How are you today?
Well, I'm upset you've just called me a veteran, but apart from
That was meant to be a compliment.
Many years of experience, shall we say, but nobody teasing you.
But truly experienced in this field.
Absolutely.
Yeah. So what you are is a wealth of knowledge, and that's what we want to tap into today.
That's no problem. I'm here to educate, and that is the view that I have, that it is a role of teaching people to understand where they're at. So you hit me whatever questions you want, and hopefully I'll be able to educate.
So we'll start off with something simple. Can you just tell us a little bit about yourself and about JC Mortgages?
That's the hardest part. I hate talking about myself. I don't mind talking about mortgages, but talking about myself. Well, in relation to the mortgage field, I've been doing this for over 20 years at this stage. I've stopped counting at that stage, right?
Okay.
So 20 is the number we're happy to admit to. And basically, I think you mentioned the teaching piece. That did come from my mother, who was a teacher in the past. And I feel that our role in all of this is to help people understand where they're at and what they might need to do. There's also, that serves a business purpose as well, because I firmly believe if I help people understand what they can do, that when the time is right, they'll then be happy for us to represent them. So sure. I love educating, I love helping people get their homes, and I like building a successful business as well.
It's great to have someone to go to talk to about this, because it can feel very overwhelming, right, when you're at this stage of your life.
Well, I'm going to tell you a story there. When I bought my first house, as a mortgage broker for a year, I got sick. Right?
Oh, no.
So I actually literally was so overwhelmed at the thought of what I was doing that it was, so I bring that experience when I'm talking to people saying, listen, this is a very, very, apart from maybe moving from India to Ireland, one of the next big steps you're going to make here is buying a home, right? Yeah. And it's suddenly so outside your comfort zone, right? Like, you're talking about borrowing significant sums of money, and that was the bit that got to me. I'm like, oh my God, I'm going to be in debt for the rest of my life, right? You've got to get that thought out of your head.
Yeah, a few decades of debt too.
Yeah, so it's quite scary. So I managed to get my head around focusing just on what the monthly repayments are. And if you view it on those terms, well, it's a little bit less daunting. But it is a daunting experience because it's not something you do every day of your life. You know?
Definitely not. Those who don't know, can you just briefly, in a few words, say kind of what the end-to-end process is for getting a mortgage?
In a few words or a long sentence?
Well, whatever's comfortable.
I'll give you 3 sentences. One, you need to know what the banks are going to be prepared to lend to you, okay? Because without knowing that, you could be wasting your time looking for things that just aren't possible at this point. So I think the starting point is educating yourself as to where you stand, okay? Once you've got that information, you can then basically work on 2 ways. One, you can basically work with what you can do right now, or 2, plan to get yourself to the point where you can do what you want. Okay. There's no right or wrong answer there, right? It's, can you do what you want, work with what you can do now, or plan for the future. And then when you have that understanding, well, the rest kind of just follows a simple path. If you're happy to do with what you've got now, then you've got the dreaded paperwork, okay? Then the banks say yes, and then you go and find a home. But ultimately, it brings you back to understanding what you can do now, and then you can determine, do I work with that, or do I wait?
Well, I had a friend say to me today, actually, don't you just go to a bank and just ask for a mortgage and then buy a home? And I think it's definitely not as simple as that. So
no, but the people can do that. I'm not saying people have to use brokers at all. Obviously, that's what we offer. But people can go directly to the bank. but it's something they don't do on a daily basis.
Yeah.
So the devil is always in the detail. So whether it be me or another broker, I would strongly advise people do talk to brokers. It's the little nuances that can trip people up, especially when you're coming from abroad as well.
Yeah,
I just think it's really important that you talk to someone who can, even if you don't want to use a broker service, rob their knowledge.
Yeah,
okay?
That's exactly it. And people might not even know that such a service exists.
Yeah.
So, but before speaking to a mortgage representative, people will do their own research. And like that, I did my own research. And I've seen that there's 4 types of mortgages: fixed, variable, tracker, and green. Could you briefly explain what these 4 are and what the distinction is between them?
Well, in truth, there's only 2 main types. Okay. But I'll tease them out a little bit for you. There's a fixed mortgage and a variable mortgage. Okay. A fixed mortgage is for a period of time. Okay. So whether it be 3 years, 5 years, 10 years, 20 years, no matter what happens in the world, no matter what Donald Trump does next, the rates cannot change. Okay. A variable rate, which is the same as a tracker, but the tracker mortgage doesn't exist anymore. There's a tracker light would be one way of describing it. The tracker mortgages got Ireland into a lot of trouble many years ago. So they don't exist in the way that people might think they used to exist, right? So, but a tracker and a variable are of a similar type. They can go up or go down depending on what the overriding interest rate market is. So if you believe the interest rates are going to come down, you're better off on a variable rate. Okay. If you think rates are going to go up, or if you like peace of mind in terms of knowing no matter what happens for the next 3, 5, 10 years that the rates won't change, well then you would take a fix. So again, there's no right or wrong answer. Yeah. And there is a bit of crystal ball stuff as well going, okay, well, what do I think is going to happen, right? For sure. And people always say, John, what rate would you take? And I'd go, well, listen, I would take this particular rate, but that would be my choice. You might have a different set of circumstances, so I'd never want to pretend I have that crystal ball, Yeah, for sure. Could you give us an idea or a rough idea of what tentative interest rates and monthly repayments might look like? Well, it depends on the amount of money you're borrowing, B, your age. Okay. Right, and then because the age determines how many years the banks will allow you. So I've seen repayments anywhere from 1,200 to 2,200. So it really all depends on how much you're actually going to borrow. Like if you're borrowing over 300, it's going to be more expensive. But if you're doing it over a shorter time frame, it's going to be more expensive as well. Okay. What I always say to people is, don't worry initially about the interest rates, right? Because that's a conversation you could have every single day, and you'd have a different idea. Get a ballpark understanding as to what your repayments would be on a monthly basis. Yeah. And then basically, once you're comfortable with that. Yeah, But in general, the longer the period of time you can take the mortgage over, right, and the lower the amount you're borrowing, the less your repayments are going to be. Yeah. But I would always encourage people to do to pay it back as quickly as possible, because that ultimately reduces the amount of total interest that you pay. I've also seen that there's a general maximum borrowing limit is 4 times your annual salary. Yes. Could you help us understand how much someone could realistically borrow? Yeah, and that's very much a rule of thumb. Okay. Now, and people have different concepts of what their salary is, and this is really, really important because people can make mistakes in relation to understanding their salary. Salary isn't just how much you earn in a year, okay? Salary is made up of your basic salary. The basic salary is the one that they will potentially lend 4 times on. Yeah. But bonuses, overtime, commission will not be as favourable as that. So each bank treats what they call variable income in different ways. So some banks might take more of your commission, more of your overtime. Some banks might want to see overtime being paid for 3 years before they'll take any of it into account. So you hear people say to me, oh yeah, I'm earning X, I should get 4 times that. And I have to go, well, actually, no, you won't. Now there are... So it kind of comes down to what your basic salary is really. That's the fundamentally most important thing. For a PAYE worker, obviously there's people that are self-employed as a different ballpark, but from maybe 80% of people will be self or PAYE workers. So it's your basic salary is the fundamental most important piece. Okay. And there are banks out there that might lend a little bit more on what they call an exception basis, but that's on a case-by-case basis, basically. Okay. And then is the 10% deposit, is that standard across the board? Yeah, well, again, it would depend on what you're looking. In theory, that's the like. I'll rephrase that. 90% of the cost price is the maximum the banks are allowed to lend to. Okay, but if you're looking to buy a house that's more than what you qualify for, you might have to bring more than 10%. So there's no way you can't bring anything less than 10%. But the 10% can be made up of your own savings. If you're buying a new property, there's a scheme called the Help to Buy scheme, or you could get a gift as well. Okay, so there are ways of making up that 10%, but it's not like if you're going to buy a house for 500. It's not as if the bank will automatically lend you 90% of 500, which is 450. Your salary would need to allow you get to 450. Do you understand?
Yeah.
Does that make sense?
Yeah.
Because people would often come to me and say, I've got X amount of savings, which is fantastic, but it doesn't the amount of savings you have doesn't determine what the bank will lend you. It's income salary, basically.
Yeah. So there's some fees that are involved in the mortgages. From what I can see, there's lender fees, valuation fees, legal fees, broker fees, and stamp duty. Can you elaborate on these or explain if I'm missing something?
Let me give you the most important ones first. There is the stamp duty is a government fee. Okay, that's going to be 1% of the cost price, assuming it's less than 1 million of the house. Right. So, in theory, one. So in the main, the average price in Dublin will be somewhere 450 to 500. So you're looking at maybe 5,000 there.
Okay.
Then you have your legal, your lawyer fees. I tell people to budget about 3,500 for that. Okay. Their fee might be 1,700, but there's a registration fee and there's VAT. So and then they pay for researchers. So about 3,500 is that's a figure that you should have for that. You're then going to need, from a bank's point of view, the only fee the bank charge per se is a valuation fee. So when the house gets done, or you buy the house, you need to get the house valued.
Yeah.
And that would be at about €150. What other fees? Some brokers don't charge any fees. Some do charge fees. We charge a very small fee of $350 only if we're successful. Okay, only if we get the bank to say yes. If we don't get it, they don't say yes, there's no fee payable. Okay, so that's the way we operate. But there are brokers out there that will charge nothing, and there are brokers that will charge more. We just charge a small fee at $350. So any other fees that will be paid, people need to think of the only sort of little things like insurance is something that would be required as well. Okay, so if there's any health issues in the background, people need to think about that ahead of time so that the insurance on that doesn't cause a delay. What else? What other fees might there be? Well, you still need to be budgeting or thinking about, furniture. Right, it's not a fee per se, but
it's a cost.
It is a cost that you need to be planning for. That when you buy your new home, suddenly you're going to if it's brand new, you might need to be putting floors, kitchen. But if it's second hand, there's different things that may need to be done. So that does need to be factored into your budget in total.
And that can be very expensive these days.
Absolutely.
I looked into cashback and incentive offers, but there wasn't a lot of clear information. So could you explain what these kind of offers are and if they're genuinely beneficial?
Well, I'll explain first what it is, and then I'll give you my take on it. Okay. In any bank that offers cashback, right, is doing it to attract customers. Yeah. Okay. So banks don't give away anything for free, shall we say? Okay. Right.
Business, right?
Yeah, it is. It's a way of incentivizing business. Okay. Now, in theory, the cashback, if you stayed with the bank, I'll phrase it this way to answer if it's a good or bad. If you stayed with the bank that you took the cash back with, in the long term, it may not be a good idea, okay? Because say the bank are offering you two deals, okay? They're offering you one deal with cash back, and they're offering you another deal without cash back. Well, the rate that they're offering you without cash back is a better interest rate, okay? So if anything was to happen and you were stuck with that bank, you might be stuck on a higher rate. The first 3 to 4 years, you're definitely potentially better off with the cashback, okay? But from a cash flow point of view as to what goes out of your pocket, but from a long-term point of view, you're always better taking the best possible rate, okay? Yeah. But there are people out there who kind of play the game, shall we say, as in they'll just move from one bank to another. So they might take a 3-year fixed rate with one bank and they'll take cash back, and then they'll move to another bank.
Okay.
That can make sense, but ultimately you are always at the risk that at the point that you want to move, the market has crashed. someone isn't working, of the people, like if there was a joint people and one person wasn't working. So there's always that risk. So, but there are people who want the cash back purely because of cash flow needs. We discussed there a minute ago about housing or sort of when they go in furniture.
Yeah.
So suddenly if you're getting 8,000 or 9,000 within 2 months of closing, that's very useful, right? And you're not having to take a short-term loan out to furnish the place, you know.
Yeah, that's fair. Well, on that topic, so if someone was to switch mortgages, what should they know? Are there switching costs? Is there more brokering fees? And how easy is refinancing?
In theory, it's easy, but it will all depend at the time that you're actually going to switch. Okay? So if you bought a house today, okay, and if anything, and you decided you took a 3-year fixed rate, well, you wouldn't be able to get out of your mortgage for the 3 years because you've taken a fixed.
Rate,
So the first cost that you need to look at, if you thought there was a better interest rate, is, well, do I have a penalty to get out of my current rate? Okay? So that's the first thing you need to be thinking of. Can I move now? If you can move now, well, then it's a case of you're always going to have a lawyer fee again, okay? A solicitor's fee, basically. Now, the broker and I wouldn't charge any fees for refinancing, okay? So you shouldn't really have any that. So if you're at the point, and this is the point I always would recommend, if your fixed rate is coming to an end, you need to look at A, what your own bank are prepared to offer you, okay? And then you need to look at basically the other options in the market. But once you've had your first mortgage, I would be strongly encouraging people to look to reduce the term. Okay. So say you've taken a mortgage out for 30 years and you've taken a 3-year fixed rate, suddenly you're at 27 years left.
Yeah.
Right. You might make a small saving by moving your mortgage, but if you can reduce your term by 3 or 4 years, okay, you may ultimately be paying more money on a monthly basis. But the total interest you save is huge, and suddenly you're taking 3 or 4 years off your mortgage as well. So obviously when you're getting your house the first time, you don't know what to expect. So there's a bit of caution is prudent, so you're not kind of over committing to a monthly repayment. But within 3 years, maybe your salaries have gone up. So, and then you're looking at kind of your overall finances again. So the quicker, ultimately, the message I want to get across to people is get your mortgage paid off as quickly as possible, making sure you can still live a life as well, basically. Yeah, for sure. Okay.
On that topic, I've seen social media influencers try to give financial advice, right? Okay. So one video mentioned that you can overpay your mortgage without any penalties, which could reduce your mortgage term. Is this always true, or are there conditions attached to overpaying your mortgage?
Certainly, in generic terms, it's perfectly in line with what I've just said. Yeah. It's not always true, though. Okay. But it is great advice in theory to pay your mortgage back as quickly as possible. Some banks will allow you pay. If you're on a fixed rate, will allow you pay as much as you want. Other banks may only allow you pay 10% of the mortgage. So say you owe 300,000. Well, I'm not saying everyone's going to have 30,000 to pay, but if you did have, that's the maximum that you could pay. Okay, and then there's another bank that might only allow you pay 10% of the mortgage monthly repayment. So you might only pay $2,000 a year. So the advice, spot on. The devil is always in the details. Yeah. So depending on which bank. So at the outset, if overpaying your mortgage is important, that would be one of the factors that you would take into account choosing the bank, which bank you want to. So there might be two banks that are offering very similar deals. If overpayment is the sort of really most important thing, it would push you one way.
And is that something you can see before you take the mortgage about whether you're able to overpay or not?
No, that's those conditions aren't in. That you can that will be something we'd have a conversation with people about. And as I think you're getting from this message, I believe in overpaying. I believe in basically clearing your mortgage in the quickest time frame possible.
Yeah. You mentioned Help to Buy before. So there's various schemes like this, Help to Buy, First Home Scheme. Are there any schemes that people might not know about?
There's the affordable housing scheme, and that's something we don't get involved with, but I would certainly worth checking out. It's similar to the First Home Scheme to a degree. My understanding of it is it's very difficult to get on it. Like it's very selective. It's almost like a lottery to get on it. So it's similar for new products. So it's like, I don't want to give this as definitive information, but with affordable housing, the house might be worth 500, but they might be selling it for 350 because you're
Okay.
qualified for your salaries aren't high enough. But
Okay.
that would be something definitely worth checking out.
Yeah,
The
okay.
two
I didn't
schemes
know
that,
about
the two schemes that we tend to deal with mainly are the Help to Buy scheme, which is the tax for the last 4 years, and then obviously the first home scheme as well.
Okay. I didn't know about
They're
that
for
one
new
at all.
properties only though. Like
Okay.
the amount of questions I always get asked, well, what about second-hand properties? Unless the house you're living in is for sale, that's the only instance can you use the first home scheme for that.
Okay. And I think a lot of the schemes are for brand new builds.
Yes,
Yeah.
exactly.
Are there any schemes that help with second-hand?
The only one I mentioned is the first home scheme. If
That one,
if
okay.
you're living and your landlord says, I want to sell the house, that's the only
That's the
way
only
you can
one,
own.
okay.
There is sort of grants available for houses that are kind of derelict, but that's only after the fact. They don't help you actually buy it. They might help you renovate it.
Yeah. Okay. Coming back to the start of this process, the preparation stage. So before even thinking about applying for a mortgage, what do people need to think of? What do they need to prepare for? What's approval in principle? Can you explain those
Okay,
terms?
well, the first thing I think people need to prepare for, and this happens with all bank accounts, that without a shadow of a doubt, this is the most important thing for two reasons. One, that most of the banks want what they call an ability to repay. So say your repayments are going to be $1,600 a month, right? You need to clearly show an ability to repay of that $1,600. Okay. So if you're paying rent, don't be paying rent by cash, okay?
Yeah,
if you're living with a family, don't be putting a family's member's name on the bank statement. Just have a narration, rent. Banks don't like family being paying rent to family, okay? I don't understand it because I paid rent back home when I was living, but that's the way the banks view it. Just that's a little bit thing to be careful. And I notice within the Indian community, you help each other a lot, okay? So there's money going back and forth between friends.
Yeah.
Stop that for the time. Before you're preparing for a mortgage, try to get your bank accounts in as clean a way as possible, so that anyone who's looking and underwriting go, okay, well, they're paying their rent there, they're saving there. There's no weird transactions that we need to ask questions about, because suddenly when they don't understand what's happening, it leads to a question. That answer to that question can lead to another question, and it can become a never-ending circle of pain, basically, right?
Yeah.
So, tidy bank account. So, to move forward in terms of the approval principle, that's just when you have all your paperwork in good order, and the banks are happy with your bank statements and are happy with your income documents. They will then issue what they call an approval in principle. Okay? That approval in principle basically is valid for about 6 months. Some banks will offer it for 12 months, but in truth, they won't re-look at it for 12 months. But if after month 7, if you find a house after month 7, they're going to look for your documents again. Okay.
Oh, really? Okay.
Yeah. So in
So
theory,
it's kind of like a buffer period. It's like, here's your mortgage, it's approved, but you need to take it out within 6 months.
and the advice I strongly give to people, you don't stop behaving or living your bank accounts just because the bank has said yes, okay? Because at any point in the whole process, they can come back looking for more information, looking for more paperwork. So you need to kind of keep your bank accounts in
check.
In check. That's a nice way of describing it.
Yeah. Sorry.
All right. No.
So let's say I was to start today.
Yeah.
Before I go to the bank, how long do my
Before you come
accounts...
to me, you mean?
Yes,
Okay.
yes, sorry. Before I come to you or before we start this process,
Yeah.
how long do my bank accounts need to be clean?
They look
As you said.
look for 6 months bank
months.
accounts. So
Okay.
that would be in a perfect world. If you're thinking of buying this year, I'm not saying you might be ready now, right?
Yeah.
Unbeknownst to yourself, and I'm not saying just because I've said it needs 6 months clean bank account. Don't explore the opportunity, because if you can answer the questions, they can be done. But if you wanted the easiest process, right? So say you're saying, I want to buy a house, what do I need to start doing now? Well, then you'd kind of make it as easy as possible, you know?
Yeah. Now, within the Indian community, are there any common reasons that you would see why mortgages would get declined? Or are there sort of patterns or issues that people are unaware of?
Yeah, great question. One is the money between friends. That's the first thing that I've noticed, and I've always say, stop it for the moment. Don't be trying to, a friend comes looking for help like it's the most natural thing in the world to help a friend,
Yeah.
okay? But it's not the best from a mortgage application point of view. So if you're planning to do it, just you need to be kind of, because your bank accounts, it just won't help an application. The other thing, and this, I have a bit of a bee in my bonnet about this, because when people send money back home, some of the banks view that as a commitment, okay? Which I fundamentally disagree with, okay? Because if you want to help your family back home, that's on you. That's with your extra money but they're viewing that as a sort of a loan as such, or as a commitment.
A repayment,
and they potentially reduce. So the advice I give to people is, if you want to help your family, but you're looking to plan for a mortgage, take cash out, give it to a friend, and get your money sent home that way. Because I don't like that. I think it's wrong. But it's an argument you're not going to win with the bank.
Yeah.
So that will be the advice, and I don't mind saying that publicly to people because
it's good advice.
What?
It's good advice. It's something that I think a lot of people in the Indian community do, is sending money back home. So
the one thing that causes a bit of pain for the Indian community, there's a thing called a credit report called the Experian Credit Report. So if you haven't been living in Ireland for over 5 years, the bank look to see a credit report from you back home in India, done through Experian, so that the reason they ask that question is to make sure there are no loans, right?
Waiting for you back home.
With your name, and that sometimes happens where people may have a home that the loan is in their name, but it's really they took a loan out to help their parents buy the house, right?
Yeah.
There's conversations to be had around that for sure.
Okay.
But that is something that is certainly worthy, because the banks will look for that piece of for that document.
Okay, very good to know. Okay, we'll move on to our rapid fire round.
Oh my God, I feel like I've been talking. Okay, can I? Okay, here we go.
Do you need some water?
I think I need some water. We'll keep going.
Okay, fixed or variable? What's more popular right now?
Fixed.
Okay. One biggest mistake first-time buyers make?
Their bank accounts being messy.
Okay. Should you always go with the lowest interest rate?
Not necessarily.
Is cashback always a good idea, yes or no?
No.
One myth about mortgages you want to bust immediately?
Stamp 4 is not necessary.
Okay. Credit card debt, automatic red flag?
No.
Okay.
But not advisable.
Okay. Overpaying your mortgage, smart move or situational?
Smart move as long as you can afford it.
Okay. Approval in principle, how long should it take?
2 weeks.
Okay. One document people always forget to prepare?
The Experian credit report and their Revolut bank accounts.
Okay.
So I said 2.
That's good though. That's one I didn't know about. In 3 words, what makes a strong mortgage application?
Clean bank accounts.
Okay. Now, you said you wanted to be a teacher. So if mortgages were a subject in school, what grade would you give most applicants?
Well, that's a great question. Well, there's a variation of
but like your
grades.
typical applicant. Maybe someone from the Indian community.
Okay. C+.
Okay. Ooh, that's low.
Well, I would have always been aiming for a B at school, right? So it's very close to being where you need to be to get a B gets your mortgage every day long. So C+ is very close.
Okay. Okay, that's not so bad. So.
Okay, you don't need to be perfect, basically, right? But you do need to be good, and it's with a little bit of work, you'll get to that B. You'll get to that B.
Yeah.
Okay.
Okay. And my last question. So you said you were that strict teacher in school.
Yeah.
Or you would imagine.
Forget those words. Yeah. Go on.
If you were to give everyone one piece of homework as they start to prepare for their mortgages, what would it be?
Examine their own bank accounts, right? And look to see if they can. Okay, if you get an idea as to what your mortgage repayments would be, and then look at your bank accounts and say, could I prove to a 10-year-old, right, we're going to talk to the teaching here, could I prove to a 10-year-old that I could meet these repayments by looking at my bank accounts? If you can do that, then you're in a position to apply for a mortgage.
So that's a hefty piece of homework too.
It is a lot of homework, but worthy. At the end of the day, ultimately, and I mean this from the bottom of my heart, when you get the keys to your home, it's an incredibly fulfilling and proud moment, right?
For sure.
But it's not, you don't wake up ready. It is a journey, and there is work that needs to be done. And when you're outside your own personal knowledge sphere in terms of location and community, it's even more daunting, right? So I've got absolutely nothing but admiration, because I don't think I could have gone to another country and invented myself to the point where I'd be able to buy a home there.
Yeah.
So I think anyone who's aiming to or has done should be incredibly proud of themselves.
And that's a beautiful way to wrap up this interview. Thank you so much for being here with us, John.
Lovely to meet you.
Lovely to meet you. Is there anything you'd like to say to the audience before we sign off?
Yeah, sorry. Thank you for that. I am putting on a seminar on the 21st of March, so if anyone wants to reach out, just send me an email to john@jcmortgages.ie, and I'm probably putting one on in April as well. So what we do offer people is a free mortgage roadmap. So again, john@jcmortgages.ie. If you want to send me a mail, I'll then produce a roadmap that will show you where you are and what you might need to do to get the home that you want. And that's the basic education piece that we offer from the get-go. Okay.
Thank you so much.
No problem. Thank you.
Vaikitentha Parupadi.